All right, everyone, welcome back to another episode of the Crypto Rundown, joined by my amazing friend over there back in sunny San Diego, Bryce Paul, and super producer TiVo in frozen Delaware. How are you two gentlemen doing this week?
I'm cold. I literally have the blanket on.
I'm getting over a cold. Definitely in San Diego, not used to the rain and all the clouds. But things are better now. I'm on
Bryce,
the up and
you
up.
sent me a video of what looked like the perspective literally from our old office, my old apartment in San Diego, getting flooded.
Completely
Getting
flooded.
flooded right over the boardwalk. Is everything okay over there?
First time it's happened in a long time. But yeah, there was a big storm last week in California, and it totally gutted a lot of San Diego. I mean, some of the beaches were completely upended. It was wild. You guys got to see some of this. Maybe we'll throw some clips in real quick of where we started this whole shindig here in Mission Beach.
Send me those.
Yeah. We started right next to Tower 18 over there in Mission Beach. Yep. Looks like I sold the top. And global warming is absolutely real. So a couple things that were very interesting that I learned from just watching that video. But there's been a lot of things that we've learned here in the crypto markets last week. And what a week it's been.
Yeah, storms brewing in the price action. So we talked about it last week on the show, just the general price action. Another strong week. The 5-day chart is saying 11% for Bitcoin. Solid price action among a lot of other projects as well. So, what are you guys seeing?
Well, we're going to have to separate the noise from the signal, first of all. And a lot of the noise is coming out of the news. We're still seeing bad news, lots of layoffs. The World Economic Forum just had its huge meeting. Jamie Dimon's crapping on crypto. But despite all that, what are you seeing, Bryce? That's the actual signal.
So I actually want to throw up a quick chart, okay? I'm going to share my screen. And I want to just do this tab right here. And what you guys see right here is, and I'm going to get rid of the 50-week as well as the 20-week moving average. I'm just going to keep up the 200-week moving average on Bitcoin. This goes back, obviously, to 2010 when Bitcoin really first started trading, and it was just cents. You can see over here is about 6 cents. So this is a logarithmic chart that tracks the price of Bitcoin. 200-week moving average is very key support. You can see it really caught the bottom twice, caught the bottom again. And you can see we've been under the 200-week moving average now for 217 days. This is a very, very simple analysis and very simple chart. I'm going to be telling my grandkids that I did everything possible to secure their financial future and their freedom by buying the Bitcoin 200-week moving average. In fact, buying the dip under it for what is literally the first time in Bitcoin's history that it dipped below the 200-week average. So right now it's at $24,500. You can see it also coincides with this pretty clear horizontal resistance right up here at about $24,500. It's a very, and call it 25K. Just call it 25K to make things easy on the math and make things easy on the psychological sort of level and support. 25K for all intents and purposes is the level for Bitcoin to beat. If we beat above, and you can also see it was the support level that held the entire collapse. This was the Terra Luna collapse right back in May of 2022 when Three Arrows Capital went belly up, and they bottomed out at 25K. So this is the pivot point, okay? There's very few pivot points in markets, and this is one that everybody's going to be watching. So whether that means price shoots up quickly, kind of wicks through it and falls back down into this downtrend channel, that's a possibility. Or whether price kind of clears out, lots of shorts get liquidated, and it cascades us all the way back up into our prior channel, which was really in between about $32,000 and $47,000 or $48,000. That's the other really key channel that we traded in the early quarters of 2022 between January and May, really before the war, and everything just went fucking bonkers. But 25K very important level to be watching. I'm a proponent that we're going to just see just fireworks, absolute fireworks. Everybody who has traded crypto like me for over 7 years now is going to be like, that's what I know and love about Bitcoin. That's the volatility. That's my asset that goes, 120 vol when the S&P's 20 vol. Over the course of an annual sort of look back. And so we're going to see not only Bitcoin go crazy, I think Bitcoin's going to lead the pack. I think a lot of altcoins will sell off in terms of Bitcoin. So have a little bit more Bitcoin exposure. Again, this is not financial advice. This is just my observation as opposed to altcoins, because we're seeing Bitcoin's dominance also blow up. If let me throw up a quick screen share, Pete, before I toss it back to you real quick of Bitcoin's dominance. So this is really a chart that shows Bitcoin's dominance relative to the altcoin market. Again, this is a 200-week moving average. You can see this is the altcoin sort of, altcoin mania of 2017 when Ethereum blew up, Litecoin blew up, Cardano, all that stuff. And Bitcoin has came back down into this really tight channel. And it makes up Bitcoin's market cap makes up 44% of the total crypto market. You can see right now. And we're just right here in this range. But to me, this market, it looks like a bottom. I mean, this really does look like a long-term sort of trend reversal point. Some technicians would call it an Adam and Eve bottom, where you have a very sharp drawdown followed by a rounded bottom. So the price target for this chart would be really back up to the breakdown point, which is 57%. Okay, so that means Bitcoin's market cap could go up about another 10 to 15%. Or its relative market cap could go up another 10 or 15%. That means BTC, and if you even look at the ETH BTC chart, this looks like a really tight range with not a lot of buying going on in this range. I think Ethereum in terms of Bitcoin breaks down to the 0.5 level, while BTC breaks out of its really key, all eyes on this 25K moving average level, pops back up into maybe the 30K range here in short course. And then, of course, Ethereum and everything will follow. But I do think that Bitcoin's going to lead the pack. You could see Ethereum here sitting down on its 200-week moving average with some strong sort of support being found. I got my eyes on this kind of uptrend channel right here. See if we could get back in this channel, hop back up. But I think Bitcoin could really lead the pack here and bring some altcoins down with it. A lot of people who are trading the market right now have not seen a market where Bitcoin's a lot stronger than altcoins. They think, they're all correlated. If Bitcoin's going to go up, altcoins are going to go up harder. That's not always the case. Sure, it's been the case for the last couple of years, but people are going to remember why crypto's here, that Bitcoin started the whole industry. It started everything. It's the most liquid. It's the most secure. It is got the broadest adoption. It's got some of the largest developer base and most decentralized. It's got a lot of investment from people that are in it ideologically for different reasons than they are into Ethereum, right? People are into Bitcoin that are like, the Saudi sovereign wealth fund out of the Saudi Arabia. Kind of botched that. But the kind of people that are in Bitcoin are like the sovereign wealth fund out of Saudi Arabia, who is looking for, kind of geopolitical hedges to the dollar kind of becoming less of a current, sort of sole trade source for the rest of the world. They're looking for Bitcoin as really a political hedge and, this global inflation hedge. And I think that narrative has completely fallen off over the course of the past 2 or 3 years as everybody was looking at the next big thing with these smart contract platforms and the sexy speed from Solana that you could do all these, fast transactions on, and Ethereum and Cosmos and all these next big things, right? But then slowly but surely, Bitcoin was just continuing to develop, work in the background, and it never got really much attention. But guess what? It just held up pretty well throughout, FTX, which is one of the largest frauds perpetrated in, human history. And it's back above 20K, back from where before that whole thing started. And so what doesn't kill you makes you stronger. I think Bitcoin's time to shine is now. It's 14 months leading into the next halving. Guys, if you look back at every chart, guys, this is exactly when Bitcoin bottoms. 15, 14 months before the halving. Peaks typically, 15 to 18 months after the halving. Guys, I'm bullish. And I'm really bullish on Bitcoin relative to altcoins right now.
Yeah, very well said. And just to further along your argument, Bitcoin is now accepted as sound money at the government level, the federal government level, across several countries throughout the world. Just think about that versus whatever your drinking buddies are telling you, no matter how smart they may be. It's not a narrative or anymore. That's an actual fact. So maybe if there was still some debate or uncertainty a few years ago when maybe your buddies heard about Bitcoin or you first heard about Bitcoin, a lot of that stuff has been cleared up, and it's time to get with it.
This to me feels like part of the market cycle where a lot of people got in and they're like, oh well, why am I going to hold Bitcoin if I can hold a different altcoin or something? And so they hold the altcoin.
And I've been guilty of that myself.
I've been guilty
most of the time. But I'm going to say this, and we may have to have this passed through our lawyers and edited later, but this is the prediction I'm going to make. If you do not buy your Bitcoin in 2023, you will have officially missed out.
Okay. Pizza Mind's hot take. Again, we're just random guys off the internet. We're not financial advisors. We're not your financial advisors, certainly. So take everything.
Not. But if you want us to be, pay us a lot of money. Consider it.
Well, I'll say this. On first week of January, if you follow us on Twitter, I did tweet out that I would be taking a cold bath every day until Bitcoin has reached 25K. And since that tweet, just look at the charts. I'm not saying it's me. You're saying the halving. I have other ideas. Just there's a lot of momentum. There's a lot of momentum is what I'm saying. But when
it comes to torturing TiVo, that's an actionable signal we can take every time for sure.
But
clockwork. And then there's also Jim Cramer, who's now like an official counter trade signal that's now like being mapped on charts where you can literally like apply his tweets on TradingView to like the absolute bottoms of market moves. And which is hilarious.
I think there's an inverse Kramer like ETF you can either follow and make it yourself, or you might even be able to buy it.
Yeah,
that's tough.
Absolutely amazing.
I think somebody did launch an inverse Kramer ETF.
That's tough.
But do you know why that works? And I want to really stress this point home. The reason why you can bet against Kramer every single time is because markets are rigged. The entire financial system at large is one big rigged game, and if you know how to play it, you can sleep pretty well at night. And what that means is when there's a dislocation between what you're seeing on the news and the narrative trying to scare you out, that means you're still in an accumulation phase. And then what happens after the accumulation phase is the markup phase, and that's what we know as the bull run. And that's when you start to see the news flip bullish, and there's lots of positive stories. And CNBC's got a crypto guy on every other day talking about how this is the future and the next big thing. And you see scams come back and the next Shiba Inu's pumping out and everyone believes they're going to get rich. That's the beginning. But if you could learn anything in life, don't even spend 4 years at college doing anything. Just read a book on Wyckoff market cycles. If you can understand that one thing and how the world works, it's so much more important than pretty much anything I ever learned in science or math or physics class. Just understand that markets are rigged and this is how the game is played. And right now, during this bottom, I think we still could see a slow incline as a lot of the world understands 2023 is the year to get in or it's too late. From what I was experiencing last year at all these conferences that were beyond sold out capacity and seeing things on people's name badges I've never seen before from gigantic institutions like Accenture and IBM and Google and BlackRock and other, I haven't seen family office name tags more often than I ever did last year. So everyone understands it's now or never. And they're just trying to figure out not so much what to buy, but just how to store it, how to custody it and keep it safe. They've already made the decision that crypto is the future and it needs to be part of their future. If it's not part of your future yet, you've got a few months left to figure it out.
Yeah, I mean, we're 15 minutes in here, guys, and this is just some of the best content I think we've put out. Awesome charts, awesome speeches. And if you want more, click link in the bio. We've got a lot to offer. This, you guys are killing it in the content game right now.
love
Happy to be a part of it. I want to build some more off of what you were saying, Bryce, with the accumulation and the market cap. So I saw this chart, and we did this a couple months ago. Remember when we looked up the Dogecoin market cap and it blew our mind?
Yeah, relative to Amazon and all
Domino's Pizza, Expedia, all that stuff. So here's the Bitcoin one, and I didn't know if it might some things might jump out at you.
Top assets by market cap. We got gold at 12.6, and we got Bitcoin at 402. So we got about a 20x or about a 22 or so x to go, but before Bitcoin catches up with gold's market cap. And here's why I think Bitcoin, again, why it's such an interesting play right now is because it competes for different money than Ethereum and altcoins and all that kind of stuff. Like Bitcoin's not really a competitor to any of those. Bitcoin's a competitor to like sovereign currencies and to sovereign debt, essentially, because Bitcoin is a currency system that's not built on any debt like every other fiat system. So it competes for a completely different unit of economics. And I think that obviously that unit is a lot larger currently right now than the sort of crypto traders and crypto hedge funds that are just trying to eke out alpha between some of the altcoins, which are all competing with another. But if a really serious, large, high net worth, ultra high net worth sort of individual or family office or super traditional hedge fund is looking at the space right now, they're generally looking at, are we going to buy Bitcoin or are we not going to buy anything at all? Like if you could convince them from 0 to 1, like that first step they're taking is Bitcoin. And they're also looking at it because they're saying, well, if the cryptocurrency sort of ecosystem succeeds, Bitcoin was the first, it'll probably be the last. Like if we're going to make a bet on the space, let's go there. Also the relative value of it, like I said, just being below so many key long-term moving averages that it hasn't been before. And looking at all the dead bodies strewn along the way with FTX and the Genesis bankruptcy, and knowing that lots of leverage has currently just been expunged from the market and a lot of bad actors have been expunged. And now Bitcoin's starting to rise back on a steady trend above 20K. It's a sweetheart setup. To me, it's free money buying Bitcoin before the 200 week moving average like we're at right now. I think a lot of people are going to want to continue to squeeze in this market. It's going to drive Bitcoin higher. It's going to drive a lot of interest in the space. And then altcoins will have a glorious moment. But I think it's probably Bitcoin first from the recovery. But again, not financial advice, just my crazy opinions on and what I'm seeing after kind of being in these markets. A lot of people, like I was saying earlier, like they buy altcoins first and then, Bitcoin moves up and they lose value in terms of Bitcoin and they just keep holding and holding and holding. And then at one point they're like, oh, well, Bitcoin's the only one going up now, so I'm going to sell my altcoins to catch Bitcoin. And then that'll be kind of the moment where Bitcoin tops out and altcoins reverse.
And for people who aren't educated like I was before I started working with you guys, you get excited from the Shibas and the Doges and those cheap, even other altcoins that are trading for $1, 50 cents, 20 cents. It's a lot more like, 20 to 40 cents. I could figure that out. And it's like when you start seeing these big numbers at Bitcoin 20K, 18K, it kind of scares off your uneducated investors.
Totally.
There's still so many people that don't know that they can buy $1 worth of Bitcoin. Mm-hmm. They don't have to spend 25 grand to get in the game.
Right. And gaining 20% in your Bitcoin is going to be the same as gaining 20% in your Dogecoin. The units look a little different, but 20% on your investment is 20%, right? No matter which way you spin it. I think people look at those units and say, oh, it's smaller units, so it's easier to double or triple, which is just not accurate. You need to be looking at the market caps, right? It's a lot harder to double a market cap that's $1 billion with a B than it is to double a market cap that's $1 million, right? And so I think that's why a lot of people get caught up, trying to buy these small cap coins or small unit coins, thinking they're small caps, but they're not. They might not actually be. Like Dogecoin, it's 8 cents, but it's still in terms of market cap, 12.29 billion dollars. So despite it's got a huge supply, and you multiply that huge supply by the price, and you get $12.2 billion. Now there's other coins that are worth, like MakerDAO, which is worth, $700 per coin, but the market cap is just a few billion, right? 3 or 4 billion. So it doesn't matter about the price, but that's a great point, TiVo, to bring up.
Awesome. Well, let's finish with this. So a lot of positivity, obviously, between us, but we do need to dissect our dissenting opinions. And so the World Economic Forum was in Switzerland last week, and there's a clip that was circulating the internet where, Jamie Dimon was pile driving crypto, pile driving Bitcoin, like a wrestler in the Attitude Era. So I'm going to play this clip for you guys, and we'll get some reactions on the back end.
What we're talking about, we pretty much always have some crypto conversation with you. I'm just curious because I don't think we've talked to you since.
I think all that's been a waste of time, and why you guys waste any breath on it is totally beyond me.
Because you just think the whole thing just is
going to zero,
and it's fake.
Bitcoin itself is a hyped up fraud. It's a pet rock.
You're back to that,
yeah,
really?
Of course, yeah.
So what do you make then of BlackRock and other firms that are investing in infrastructure?
No, that's different. Blockchain is a technology ledger system that we use to move information. We've used it to do overnight repo, intraday repo. We've used it to move money.
Right.
So that is a ledger. That's a technology ledger type of thing that we think will be deployable.
Remember, we've
been talking about that for 12 years too, and very little's been done.
There's some tokens that I agree with you on, but Bitcoin's based on a distributed ledger. Yeah, it has all the characteristics of a store of value. It's immutable. It's scarce.
Totally untrue. It's
21 million.
Well, yeah, really. How do you know it's going to stop at 21 million?
Because
I've mentioned this to people
Satoshi,
too. Everyone says that. Well, maybe it's going to get to 21 million, and Satoshi's picture is going to come up and laugh at you all.
Okay, my favorite thing about that interview is it flashes on the screen. Dimon says we should never question the creditworthiness of the U.S. government.
Exactly.
Like if that just doesn't annihilate his credibility right there, I don't know what will.
Yeah, no, he's got good points, right? He's not CEO of one of these largest banks by being a complete all-out idiot. I think he's just talking his own book at the end of the day, but he's also talking the book of America, right? Like he doesn't want America to fall behind any other country, and he doesn't want the credit and the faith of the American dollar to be questioned, because if the most pristine collateral in the world, which is U.S. Treasuries, right? If those are no longer collateral and those are no longer good, well, a lot of the fundamentals of finance start to break down because you don't have any risk-free rate. You can't trust any. If you can't trust the American government, what can you trust? And that's exactly what he's saying. You can trust math, though, right? And that's where Bitcoin comes in. And it takes a long time, and it takes societal sort of upheaval and societal, recirculations, and it takes lots of, education, and it takes lots of time for that to become traditional. And there's a saying that, heresy becomes tradition over time. And kind of that idea is that something that seems really outlandish, like, well, how are people going to trust this system like Bitcoin that's just all based on math and game theory and all these kinds of things that are outside of any one person's control? How are people going to trust that? Well, they're going to trust the rules of physics, and they're all going to trust cryptography, right? At the end of the day, in order to make everything sound. Whereas, Jamie Dimon saying, hey, if the government, I don't really want the American government to default on its loans and its debt, right? Like that'd be pretty bad. Like if the American government isn't, paying their lenders, well, what do you think that is going to happen to people who are like at home? They're like, well, I'm not going to pay my lender. Like everything stops kind of working. And you realize, well, is Bitcoin built to be a complete different system outside of that? Like it's a complete new conceptualization of money, that it's not issued based on, debt and future growth of a society. It's built on math and these trustless principles and based on, the code that everybody opts into. He says, well, what if Satoshi kind of makes more coins, right? Well, nobody would agree to that, or you'd have a minor vote, or anybody who's running a full node of Bitcoin, and you all vote. If you want to be on the chain with 21 million coins, you'll stay on the chain with 21 million coins. Satoshi would have to fork off and create his own version. But there's lots of different visions and sort of forks of Bitcoin, right? We had BSV, which was Craig Wright's thing. which was one version of it, which not many people have adopted and not many people use it and think that it's really BSV, right? Bitcoin Satoshi Vision. People stick with Bitcoin Core. There's also Bitcoin Cash, which was another fork where they try to change core parameters of what makes Bitcoin Bitcoin. So if somebody tried to make 42 million Bitcoin, nobody would use that chain. Nobody would use that system. So that's my
in addition to that, every Bitcoin is divisible by 9 decimal points. So really there's 100 million pieces of Bitcoin into every one Bitcoin. So if you multiply 100 million by 21 million, I don't even know what number that is. Like I didn't go to calculus or any of that stuff, but it's a really, 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 really big number. That's how much the entire Bitcoin supply is divisible, which is plenty of money to go around and as a unit of denomination. So in 2140 or whenever the last Bitcoin is going to be mined, the miner still will take a transaction fee to keep the network going. So it's still going to be a profitable endeavor for eons to come if people choose to use it. So the 21 million argument is, again, like you mentioned, Bryce, it's either talking his own book, because it's hard to believe that somebody that smart is really just not educated in this. He's really just defending his position, which is the largest bank in the world, essentially. So, but with all that said, they're going to be offering crypto products. They're going to be offering custody and solutions because that's where the customer demand is at. And so they're not stupid. They're just corrupt.
Well, yeah. One of the things that I do like that Jamie Dimon said in a different interview, he was asked this, maybe a year ago or something. And he said, in response to the question, was like, well, if you think Bitcoin's such a fraud and such a scam and so horrible, why are you offering, your customers to be able to trade, Bitcoin in GBTC, right? Bitcoin Investment Trust, or why are there these other private funds that are allowed to use crypto and be part of the bank? And he goes, well, that's what makes a market is disagreement, period. Like that's literally how prices are set. Because one person's willing to sell at a certain price and one person's willing to buy at a certain price. They got the supply, they got the demand, and that's a market. It's based on disagreement. If everybody agreed on what the price should be of something, then things don't really work out too well in the long term. That's why socialism doesn't work out, where the government tells you exactly what things are. I guess that's communism, right? Well, I guess socialism is very similar, but the government tells you what things are priced. That's why people are so excited about free market principles and free market interest rates, because you can't have governments which suppress real yields to negative over time like they've had for a long time, and you don't have all sorts of manipulation of the yield curve like it's going on in Japan right now. You have free market sort of decisions. That's why some people are like, oh. Yeah, I'll end there.
Well, yeah, I guess in the American economy, there's a disagreement right now between the yield curve and the bond market, right? So that's what the yield, exactly. The bond market's saying, the Fed, you're wrong, and the Fed's right. saying that they're going to keep tightening, and somebody's got to be wrong. They can't both be right. So
right, and typically the market curves, how the market prices the yield curve is a lot more accurate in forecasting how it's actually going to be how it's going to be priced and curved relative to what the Fed is saying they're going to do. And so there is going to come a breaking point here where either the Fed is going to have to come down to meet market expectations, or the bond market is going to have to go up in order to meet the Fed's expectations. So we'll see. But you're right, there is that really big sort of like stretch right now that typically will result in some kind of market volatility down the line.
Awesome. Well, we're at the 30-minute mark, and that last statement by me, I sounded pretty smart, so I might cut that.
That was good. I liked it.
Might cut that and send it to my mom. But awesome work today, guys. Thank you as always, and we'll be back next week.
Awesome. I'm excited.
Fun.